Watching Master Trader Live. Simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Hey, everybody. Excuse me. Today, technical trading revolutionized. Well, it's been a revolutionary year in the markets. That's for sure. The uncertainty, the erratic price behavior has been somewhat unprecedented in recent times. And that'll change. It's coming, and maybe today will be a pivotal day with the Fed announcement. We'll see how that plays out after 2:30. But what we're going to share with you today is what I found to be revolutionary almost 30 years ago when I started. I'll explain to you the process that most of us go through and the light bulb moments that came at a later point in time after a lot of trial and error and trying to figure things out. And I think after today, for some of you that are new to Master Trader Live, there'll be some light bulb moments and the ability to begin to simplify your analysis and remove, we'll say, the mystery from the markets. You know, as we all come to the markets, you know, we all think that there's some secrets to the markets. And I think there are secrets to any profession, which comes with knowledge. The unfortunate part about trading in the markets from a technical point of view, that there are many different ways to approach it. The majority of them lead you down a rabbit hole. And it is what it is, but luckily you're here so that Dan and I can share with you the way we approach the markets in a very simple way that'll help you move on from maybe the confusion that you're in now. So let's go, Dan.
Awesome. Good afternoon. So Greg just said, we're going to show you our approach to trading the markets. This is a summary sheet right here. We are pattern-based traders, and then we're going to take these pictures. Well, we're going to take these pictures. We teach many of them, and then we're going to see where that compelling bullish or bearish setup is on whatever time frame you're trading. And then we overlay these other concepts. Where is this picture in connection with the overall trend, support and resistance? Multiple time frames is a concept we use to increase the probability of the trade working. Is it on support or resistance? Are there volume? And we use moving averages. Those are secondary. They help, but we can trade without them. What are the broader markets doing? Greg just said in the introduction, things whippy all over the place. We think we're at that inflection point right now, ready for the markets to have a continuation higher once we get through this week.
Or lower.
Exactly. Or the breakout failed, and this could be the top for many, many months as we approach this recession. But again, Greg said our approach will help us determine that. There's no wishing. If we have a compelling setup, we execute. If not, we're like, I don't know, I need more information. And then I'll tell you what to do when I get more information. And we use market internals to intermarket analysis to help us with that. And then, you know, Greg says, hey, this should be up top, because without position and money management, you're destined to fail. I hate to say it.
Yeah, most of us approach the markets, and rightly so, from a certain point of view, because it's all about the money. Why else would we be doing it? But the majority of us fail to do it in a professional way. We're so excited about the idea of making money from the markets, but we don't approach it in a professional way to budget things, if you will. And you might think, well, why would anybody do that? But the majority of us all do. And why, besides the approach that we're inundated with when we get started, we have no idea. Why should we understand money management? Which is kind of ridiculous, but it is what it is and what most of us do. So we'll talk more about that.
Well, then, Greg, it's just so common sense to you and me. If you want to open any business whatsoever, you start with a business plan. You get education. How am I going to make money running a bicycle repair shop? What's my
Honestly, Dan, it didn't make, I was no different than what I'm explaining because, I mean, once I had a little bit of knowledge, I thought, man, I'm just swinging for the fences. And, eventually, hey, there was some success, but then there was this rude awakening of, oh my God, can I lose money?
And you're right. There's a human nature component to it, the mystery, the excitement of trading, a little bit of, gambling aspect in there. Hey, I bought this and it went up and I made money. You get excited,
Yeah.
but it's not the same aura, in my opinion, is, oh, I'm going to open a bicycle store. And that's exciting to me without you saying, okay, well, why am I going to open a bicycle store? It's to make money. Okay, put in writing how you plan on doing that.
So how
So
much am I going to put into these bikes or that bikes or this repair equipment and so on? Whereas like you're saying, we all come to the markets without a shred of those thoughts. It's just like, okay, here's a trade.
exactly. And so that this sentence summarizes the last page. We refine it using techno-fundamental analysis. That's a term Greg came up with, which we look at a combination of market internals, technical analysis, and intermarket analysis. He does a very detailed weekend market review, techno-fundamental analysis of the broader markets and sectors of if things are clicking together. And, obviously you should check us out on YouTube if you're not already in our green trading room. And he reviews that every morning at 9 a.m. Come check it out. We're looking at bonds, oil, transports, and trying to put a theme together which increases the benefit of the reliability of technical analysis. So our approach works. I define a successful trader as somebody who can systematically and objectively pull money out of the markets. So whether you can do that looking at the moon phases, if you show me your records and it works, I'd say then hats off to you. Some, like particularly option traders or others, they think technical analysis doesn't work. How does that predict the future when you're looking at, by definition, past information? Well, it does work, or else we wouldn't be doing this for 30 years with great success. And the reason for that is, we'll get to it more, but it's because charts reflect the sum total information of all market participants. And so that's what's creating a pattern, support, the trend. So it's not hocus pocus, it's reality of people putting their money on the line. Craig, why don't you?
Part of, I was going to add to that, especially in the current market environment, not that it doesn't happen or has not happened in other market environments, but we want to believe that through this pattern recognition that we see works, it says 85% of the time. How do I avoid the 15% that doesn't work? Well, you can't.
Right.
To some degree you can, but nothing is ever going to be 100%. So you have to accept the uncertainty. And this is where money management frees you from the uncertainty. Because if I was to tell you, just an analogy, I'm going to put a blindfold on you. You can hear the traffic going across the street here, but you'll be okay, 85% of the time. And you'll say, are you kidding me? I'm not going to do that. So, of course, I'm giving you a very extreme example, but in the markets through money management, you could say, I'm going to take a certain amount of calculated risk. And hey, the times that aren't going to work aren't going to kill me. And that's what frees you, with using proper money management.
All right, so Greg, before we move on, because we'll be obviously talking about this a lot today and in our approach to the market of what works and what doesn't, which is a handcuff to many people that we want to try to get them off of today, or at least start to and appreciate the objectivity of what we do. So this a subscriber of ours emailed this to us, and it was perfect. Learn secret. So I'm emphasizing that word, of course. Secret oscillator settings. Look at the masses. They don't want to take a course and learn and do it themselves. They want to lose weight by taking a pill and not going to the gym. So that's this. Look at this guy over here. Learn how to manage risk. So, you touched upon it already a little bit, but that's a beautiful illustration of people wanting the easy way out in these so-called magical whatever. So beautiful rabbit here. I have it on another slide. And so this is
Dale, let me ask Dale, because others are probably
Sure.
saying, because I said, we look at the past, and he's saying, why not the current? Well, current becomes the past 1 minute after the bar is completed. That's the past. And when I typed to him is that, yeah, we look at everything in the moment to come up with a bias about the future. That's what technical trading is. So we look at everything that was listed on that initial screen: support, resistance, candles, volume, whatever, and then create an educated, bias about what I think is going to happen. And if I'm a swing trader, within the next few days, and if I'm a day trader, within the next 5 minutes to 30, 60 minutes. So, different time frames, we have a different perspective and belief about what's going to happen in the future.
right. And so I repeated this on the prior slide. This is why it works. These candlesticks that we're looking at are not, a little child just drawing in his coloring book. A candle is showing the open, the close, the high, and the low on that time frame. How is that created? By buyers and sellers. So that one bar is reflecting all market participants that are trading that instrument. It's printing one bar on that time frame. And then we put all those bars together and the other concepts that make up our approach. And Greg has all these amazing sayings. I call them capitalisms, and this is one of them. And so a capitalism to me is, there's so much meaning to that sentence if you internalize what it's meaning. So there you go. It's psychology in motion of all the market participants, and people are putting their money on the line, or else they're paper trading and it's not showing up on a real chart.
What creates your psychology? Is it technical analysis? Is it fundamental analysis? Is it, tips from your neighbor about inside information? All of that creates beliefs about what's going to happen next. And so with that in mind, as we all place trades, however your approach is to that particular instrument, once you press the button, you're putting your money there. That creates part of that chart. And so while we wouldn't look at 1 minute of time or 1 5-minute bar and create a bias, as we put together what I call bar by bar analysis and then expand that into support, resistance, and trends, we now come to a conclusion about what we believe will happen next. And then we see what actually happens.
Okay, so you've indirectly been discussing this slide here. So how do I succeed in trading and investing? We use the term subjective versus objective. Objective, go look it up in Webster's. It means existing in fact, presently observable. That's what charts are. That's what our techno-fundamental approach is. We're looking at bonds, we're looking at real information. Subjective information is what you have to reduce or eliminate, which is oscillators. It's something in your head that's deterring you from interpreting the objective information, which is before your eyes. It could be whatever, but you're subjecting your own wishes on what you want to happen, what is not happening. How do you do that? You start with a course, education. That's Greg's swing trading course. Okay, I have this course now. You have all the available information. How do I convert this course into money, Greg?
Press the button.
Well, it's this.
Yes, yes. So, I mean, with this slide, it's to communicate, which many of us here, in anything, I have to have confidence in what I'm doing. Well, how do I build confidence? Education doesn't give you ultimate confidence. Experience gives you ultimate confidence, and making mistakes. Oh, this worked. Oh, that didn't work. How do I gain patience? Well, by putting my hand in the fire, so to speak, or stepping off the curb at the wrong time. And it's like, oh, that didn't feel very good. I better not do that again. And maybe, you got to do that in the markets 14 times because you're stubborn. And through that pain and experience, you create discipline because you don't want to lose all your money. And that all comes together as to how, but how are you going to do that? Well, you have to reduce the subjective analysis, which we'll get to, and create a method called a trading plan that through this process, you're willing to adhere to the plan. Now, if you're somebody like myself, took a little time because I'm stubborn and I'm opinionated. And after a little while, I realized my opinion had to be based on the things that I learned and I saw working, and not do the things that I've experienced not working. But in the moment, we haven't used this term in a while, Dan, mirage trading.
Mm-hmm.
Why did I press that button? Because I wanted to believe something so bad. My brain created a belief in the moment. So it's part of the psychological process that you go through to get to the end.
And so we're just showing you a couple examples here of subjective things that other people like to use because they've been taught, unfortunately, this stuff. I mean, the trend lines. Why should something bounce off a trend line? How do you draw them? This gives misleading information. Let's see a couple of questions here. We just look to the left. We look at the pattern. Remember our items that we look at, support and resistance. Well, first of all, how do you define trends? Higher pivot highs, higher pivot lows. What's a pivot high? They're not marked here. We'll show you other charts, but it just means it's where the prices change direction. And we define that as 3 or more lower highs on the left and right. Opposite for a pivot low. And then we look to the left for major and minor support. We never draw silly trend lines like this.
But Dan, we did at one time. I know I did.
Sure, I did too.
Yeah. And so when you're drawing, why do you do that? Because someone told you that that's the way it should be done, which raises questions which are on that slide. Where do I draw the lines from? Which could be the tails, the closes. And then when you see trend lines break and then prices immediately go in the other direction, it creates uncertainty. It creates fear. It creates, why did that happen? And you start a questioning process as to trying to find the truth. Let's continue.
All right, show them this oscillator.
Yeah, so
Stochastic.
whatever this is, looks like maybe a stochastics.
Yeah, it says it there.
Yeah, okay. Yeah, it does. And so why didn't it reach what's considered the overbought part? And then it went down. More questions. Why did it stay down here? More questions. Why did this move as far as it did? Why does it a rounding move versus one of these V type things? More questions. What about these settings? Are those the right ones, or are there optimized ones? Are there proprietary ones? And you get deeper and deeper into that rabbit hole with
Yep.
no oscillators.
There, continue. This is a beautiful picture with a beautiful rabbit hole.
And this is the ultimate holy grail, which is, I got this word down, Dan, Ichikumi cloud. You say, what the hell is that? You know, back in when I first started out, it was more of the golden ratios, and which is still around today with GANs and Elliott waves and so on. But this thing, some brilliant person came up with this, but it's supposed to tell you about trends, I believe, in multiple time frames, where support and resistance is, where to buy and sell. And so this blue part is the cloud. What a nice name. It's a cloud, like puffy, going to bounce off it. But how the hell did it go right through it like it wasn't there? Now, whether it's this cloud thing or a moving average or a Fibonacci line or a trend line, how do prices just pierce through these supposedly amazing creations that tell us where to buy and sell? More confusion. We're going to get to the clarity. So far, we're probably confusing people.
Yeah. These are just kind of derivatives. So let's look at now some real charts here.
Why did this one work? Right? When it broke and collapsed.
Well, you gave me this chart. It's CNBC right on this red bar. So it is in an uptrend, higher pivot highs, higher pivot lows. On this red bar, CNBC said, buy here because of trend line support. So number one, trend lines are not support. Major and minor support is by looking to the left. Number two, a trend line is not a tradable pattern. There's no, the trend line is not a pattern. Now, when we talk about retracements, and if there, remember we said all charts are the sum total of all market participants. If you have enough money being thrown on a subjective reference point of a retracement of a moving average, then it can create the support if you throw enough money at it, because then it's not going to go down anymore. But so this red bar, we looked at it and we said, I would never buy this. It's what we call a bear 180 reversal. And then it gapped down the next day and look what happened. So this trend line would have got you in at the absolute worst point with no pattern. Yeah, we kind of covered this. Let's look at other charts here. Similar to the other one.
This is the same one.
Is it? So all of this mess on here actually, hurts my analysis of looking at the patterns in the candles in support and resistance. And so I propose to people that this mess, even though, remember our slide about all the people in the line about the secret oscillators, that's what they're being sold. And the majority of the time, the information that it's producing is hurting your decision making, not helping.
I don't know if the other one had it, but this one, Dan, you've got, looks like Fibonacci retracements on here as well. So,
correct.
Indicators like this, Fibonacci lines, trend lines, maybe a stochastic on the bottom with a MACD surrounding a full moon, and maybe you're getting somewhere, but you can see all of this mess overlapping the prices, and what we trade is based on the prices. And that's what we're going to focus on.
We appreciate people coming here. We've been doing these fantastic MT lives for years now. We give as much information as we can, but we set up this no-brainer $7 trial. Come spend an entire week with Greg and me in the live trading room, and you will watch us implement our method in real time, not just talking about these little PowerPoint slides. And that's why we also reserve time at the end of every one of these where we can answer questions and look at the live markets together. Moving averages, we teach how to use them objectively. Let's start right down here, objectively, to speed up the analysis. How does it do that? Well, by first recognizing what they are. Every one of our charts has, the blue is the daily charts, the 20, the 50, and the 200. So I can take the candlesticks off of this chart, and these moving averages are telling me something, not with detail, but they're telling me about the trends on multiple time frames. So when those arrangement of moving averages are in alignment with the price action, it speeds up the analysis for us. The incorrect way to use them is by saying, haha, look, something pulled back to we already covered trend lines and oscillators. Some people think these moving averages, which is very simply taking X closing data points and dividing by the moving average number. And it's printing a squiggly line. That's all it is. There's no relevance to that squiggly line creating support, resistance, a tradable signal, crossovers. That's the incorrect way of using them. So Greg, why don't you explain the moving averages on these and how you use that to produce phenomenal information of saying, look, I don't even need to look at the other charts because these moving averages are telling me what the trend is on multiple time frames.
Exactly. So besides what we've already explained that creates this analysis paralysis is, look, the more information you look at, the more you have to process. You're not a computer, maybe, and even a computer reaches its limitations. But the more you look at, the more potential for confusion. So and if you look at moving averages, they're subjective. And it raises questions. Do I use exponential ones, weighted ones, triangular ones, simple ones? Which values do I use? Are Fibonacci numbered moving averages better than just a regular old one? And so there are just an endless stream of questions about how to approach technical analysis in the markets. So one of my aha moments was, well, how do I relate a moving average on one time frame to another time frame? And through simple calculations, I know that the 10 MA on a monthly is equal to a 200 MA on the daily. Aha. So that red line.
I explain that so it'll sink in, please.
Well, without doing,
It's
okay, how many days are in
right.
a month? You
Sink in.
figure that by the moving average. I don't remember how I did it there in the calculation.
Well, no. It's just common sense that if I'm looking at 20 days of data and did the 20 period moving average, just take those number of 20 days, and that's going to be, some on the weekly chart, you have to divide by 5. On a monthly chart, divided by 30.
Well, no, there's 20 trading days. So
Correct.
It's 20 trading days times the 10 equals 200.
Correct.
So that is that red line. That's the 200. So the 20 MA on the weekly 5 trading days is equal to the 50. Well, this would be the 100. The 100 MA.
100, correct.
100 MA.
Right.
And so as I look at the 50 on the daily, that's equal to the 10. So here we've got the 20, which is going to follow the daily chart relatively quick. And some people say, why not a 10 MA or an 8 MA or whatever? You got to make a choice. So the 20 works pretty good. And the 50 is equal to the 10 MA on the weekly. And then here's your 200, right? Your 10 MA on the monthly. So on the daily time frame, I know that the monthly has been in a downtrend and it's beginning to stabilize because that moving average, it's still pointing down, but it's starting to flatten out. And I can see the weekly trend is up and the daily trend is up. So it's pretty good. Now, of course, we got to look to the left and see what's over there and now apply price pattern, support resistance, relative strength and weakness, so on and what we're talking about. And you start to create a systematic method that puts the odds in your favor.
Awesome. So, what I'm showing, same, I'm seeing 20 and the 50. They're just showing me the short and intermediate term. People like to talk about crossovers, also giving some magical trigger, and that's ridiculous.
I'm my little charts there. It's like, these are what we call visual aids. So the short term is pointing down. The weekly is pointing down. Right? So you got these two moving averages pointing to the downside. So we look at these pictures we call charts. And so as I quickly look at this picture and I see those lines pointing to the downside, I go, oh, the power is lower. And now we apply patterns and support and resistance to say, hey, when that reaches what we call minor resistance, I'm looking for a pattern that suggests continuation. And as the moving averages flatten out, the picture now communicates equilibrium. And as it takes out a high, then we start looking to buy pullbacks and concept called major support and minor support. And then we start looking at things like wide range bars, igniting bars, and bottoming tail bars, and so on, and bottoming tail bars and pullbacks. And we start putting this all together to form high probability trading scenarios to get VWAP shown. I mean, look, you could look at, once you recognize price patterns, and you would say, and I would say to you, look at this chart, where are the majority of the bars congregated? And this one is kind of whippy, but we would say that the majority of the bars are congregated somewhere around here. So as you apply something like a VWAP, volume weighted average price, you see where the majority of bars are. And then where the majority of those bars are, common sense tells me that's where the majority of the trading occurred, equals volume. So somewhere in this area is where that VWAP will be. So you don't need any mystery indicator to tell you where the majority of trading has occurred.
And now, VWAP is not a pattern.
Right. So we're just looking for areas. Now, if the trend is up and it pulls back to, we've all heard, what was resistance becomes support, and now I'm stalking that area for a picture called candlesticks, it tells me when to act. I don't need all that hocus pocus.
All right. All right. So this is a good little example, and I'm going to show you the candlesticks on top. But short, intermediate, long. Can you visualize what's going on underneath? Is something is extended? What are the trends on multiple time frames? But we don't buy crossovers here. But now, go ahead.
Yeah, I'm putting a box around those moving averages, which we already explained how to interpret those three moving averages, which means those trends are congregating in the same area. And so simplicity of a moving average is 20 MA, add up 20 numbers, divide it, come up with a calculation. Every time you get a new bar, drop off the old, redo the calculation. So if I'm doing that over 20 periods, 50 periods to 100 periods, there must be some kind of consolidation going on because these moving averages are entangled almost with each other there. Now, when they're moving down, well, prices had to go down because the moving averages can only follow what the prices do. They can't lead, they can't predict, they can only follow. So if the picture is one in which this is pointing lower, prices must be going down. The moving averages flatten out. The 20 MA starts to curl up.
Yep.
Well, here's a crossover. Well, what does that mean? Well, it just meant that this faster moving average went faster than the slower moving average, and it crossed up above it. There's no mystery to it. It's just mathematics and so on. So here, 200 you can see is flat and prices caught up with it. And now we have this convergence of moving averages again, which communicates it's a probable inflection point there.
That's right. Up or down. So
Yeah.
now, yeah, so let's take everything Greg just said now, and now let's overlay some of these things. So back in here, when he was talking about over here, inflection points, we don't just short 20 under the 50, but in this case, it supported it. I'm not trading a good crossover, but you can see here, we had a breakout failure, red bar in a gap below major support. Now I got a flat 200, flat 50, 20 MA rolling. The concept Greg mentioned is the void, look to the left, which I can't in this example, but assuming you had nothing to the left in terms of significant support, that is an excellent short entry. I'm looking to short master trader bearish setups until the trend gets extended or near its destination, or it makes a higher pivot low. Momentums. Go ahead.
I was going to say these moving averages, how fast that went from flat to such an aggressive slope. If we were just looking at the moving averages, it has to communicate to you that prices move fast because they have to move, the moving averages have to move slower than prices. So for this 20 MA to go from flat to say a 45-degree angle so quickly, whereas you could see here, look, how much slower it happened, right? The slope of that moving average is one of the visual aids that tell you how fast prices are moving. But bottom line is, all I have to do is look at the price, because when you have bars jumping like that so quickly, right, prices are moving fast. That's momentum. That's strong demand or strong supply.
Yep. So this thing rallied pretty near the breakdown area, started with a bearish gap under these 4 bars lows. This is bearish price action. So see, I can take these candlesticks off. I don't need them to trade the pattern, but the pattern coupled with the short, intermediate, and long-term trend being flattish. Now I had this star right here is a bear gap breakdown right here. Bearish consolidation, it can't bounce. Remember, Greg talked about the inflection point right here. I don't know if this inflection point here is going to be up or down. I really don't. But now I do with looking at the candles. Now I have a wide range closing breakdown. Inside bar that stays in the lower third. That's what I have. This definition right here is called a bear 1, 2, 3 continuation. So that was beautiful short breakdown. Price void, look to the left. This would be my first target, second target over here. And we scan for these. So somebody asked earlier, and we're going to show you in a couple moments here. This is a small snippet of TC2000, but this is one of my favorite patterns. I love these. I love wide range bars. I love gaps. And we're going to show you that in a few moments. But that's where we found this setup. Look, JHG right here. JHG.
So what I pointed out there, some become what's a 1, 2, 3? Such a simple pattern. In of itself, it doesn't mean you should do anything because you have to put that very simple pattern in the context of what preceded it, voids, trends. So wide range bar, WRB. This bar is a lot bigger than the ones that preceded it, so it's wide. You don't have to say many will, well, is it $1? Is it $2? It's relative to what you're trading. Just a visual thing. Number 2 is a narrow range bar, and it stays in the lower half of the wide range bar. And it's a continuation pattern. We're looking for this to move lower, to continue to drop.
Yeah, very, very high probability setup right there. And we said we have 85%. Could this thing gap up to $24 the next day? Of course it can. And then we just have to manage it. But this, if it triggers under the low of these 2 bars, very, very high probability short setup. So this goes back to the first slide, which makes up our master traders strategies approach, combining all those concepts. That's what Greg's course does here, the swing trading course, whether you're trading anything, stocks, options, ETF, currencies, futures. We have a technical based approach even for options, because options are a derivative of the underlying of the stock or ETF. And so we need a bias using our technical approach before we buy or sell options.
And this course covers a lot more than what maybe the titles is, because it covers the money management, position management, trader psychology, keeping a trading journal, intermarket analysis, market internals. So it's quite in depth, and you could read about it on the website.
Yeah, regardless of whether you're a beginner, or we've had folks, as you know, that have been trading 20, 30 years take this course, and it's just a new revelation to their existing experiences. This is a special we offered last week in MT Live, and we just decided to leave it open through the end of the week here. And it's that swing trading course Greg just mentioned, plus our top-down swing trading course we're going to throw in for free. These TC2000 scans that we're going to show you right now, lifetime monthly coaching, 40% off. This is the same, but it's the directional options course with the same add-ons there. And then obviously we have one where you want to combine these. But I always recommend Greg's course, as I mentioned, before you take any of the option courses.
Yeah. And I don't think you mentioned the advisory letter, Dan.
Correct, I did not. Yeah, so you get a free month of our swing advisory letter in these 2 and 3 months in this one, correct?
Yeah.
All right, let's take a look at real charts, as we always do around this time. We can look at the market, answer questions, show you the TC2000.
And this page doesn't have the scans on it, but I could flip over to that and just simple chart to look at and talk about what we have been discussing here. You seeing the charts, Dan?
No, I am not. I guess
That's back to you. And so that is, everyone should see them. Let me just see here.
yes. No, I do.
Okay. What do you want to focus on for charts? Well, Sam, well, I'm just going to explain this chart. What I've got on the bottom here is just a mathematical calculation that displays when there's been a volume spike, rather than look at the volume, because I prefer not to. It just tells me that there's been a volume spike in these areas. Again, looking at this one moving average, I see is it going up, down, or sideways. And as I look at the prices, let me just get the No, I'm looking at how things begin to progress, right? So this broke down, right? It started to break down and it made a lower high and a lower low. And here's what we call major support, the low prior to the higher high. And these dots here, what we call pivots or swings, and it just simply defines a bar with 3 higher lows to the left and right, or on the upside, lower highs to the left and right. So it creates support, creates resistance. And so this broke down under that low. It comes back up, it's making a higher low. And here is a wide range bar. So we've got something that appears to be making a bottoming pattern. So what I want to see, and I mentioned this one in the green room yesterday, it had this bar and it's like, okay, it needs to trade above that bar's high. And we got this big news announcement coming out today, but this is holding up relatively well. And if it can take out these highs, for me, that's a long. Now you might say, well, what about this? Well, that was a month in the past and it was tested once and it made a higher low. So I like it. I believe, right? I believe it will go through that area based on this pattern.
Yeah, Intel's on my list.
I think
I just found TXG right before we started here, Greg. Look at TXG, daily, weekly, monthly. Looks good.
no, Lou, we don't put the old coaching sessions in your member area, but we mail it out to everyone. We email it out to everyone. Okay. Intel. So you got to look at a higher time frame here because this thing has been killed. All down. And looking to the left, it's in this area of congestion. And a couple of months ago, there was this giant wide range bar. It was a monster move on the monthly chart. Weekly chart, bottoming, right? Pivot, pivot, pivot. It took out resistance. Members get weekly lessons if they subscribe to weekly lessons, BC. And so here's a pullback on the weekly chart. Now, this candle here, it's got tails on the top and bottom. So while the small body communicates a slowing in momentum, this says, hey, indecision, whipped down and it whipped up. So we're waiting for this to settle down and maybe can turn higher. And as we go to the daily time frame, you can see, how the depth that it came down and it gapped up here. Notice the volume spike. That's a good sign on the move up. But bottoming patterns have a higher tendency for these deep retracements. So this is just needs a little bit more time. But based on the monthly chart and how much it's come down on that monthly chart and in an area of support, and it might come pull back down here again, but we're looking for this to settle down and potentially be able to make a sizable move. Now, semiconductors, that intermarket analysis and top-down approach, we know this is a small part of a large sector. And looking at this chart and looking how far down Intel came, we say, well, Intel was a lot weaker than a lot of others. That's a dog. But we have a concept called catch-up. And so Intel may play some catch-up in the latter part of this year. You can see the big move that this had up, from 2019, 18, and this big correction. And it had a bottom here, and, it's been consolidating. So there are other semiconductor stocks, that may look better than Intel, like this, but it's correcting. And so again, it's a monthly chart, and we look at a daily, and it doesn't look so attractive. So it's just not ready for prime time, so to speak, yet. And it may drop, but we're watching. Intel was just one stock. TXG. Yeah.
Yeah, I found that before we started, daily, weekly, monthly are all interesting. Just
So this is the healthcare sector. This was healthcare sector was underperforming for a long time. And then, different healthcare sector ETFs began to outperform. And, this one here looks pretty good. So,
Yeah.
So I scaled out there to get a bigger picture. So you can see how this is got decimated from, 200 and something down to $30. So, this little pullback here and this consolidation, this is a weekly chart. And this is, I guess, kind of like a flag, kind of a pattern, which is defined by a momentum move up, but this is only one bar, and then a very slightly downward sloping arrangement of candles. And you've got this 2-bar reversal here. So that's attractive from a weekly time frame for sure.
monthly too. It's on my list. Yeah.
Yeah. And you can see it's pretty erratic
Mhm.
on the daily time frame, but you can see how it spiked down and a 100% retracement of this nasty red bar. So now as it comes into this resistance, what we want to see, well, a couple of things we could see. It could either spike right through it, and I guess maybe it reported earnings today, or it's going to report after the close, Dan. This is what this tells me right here on the platform, that earnings are due today.
Yeah, it must be after the bell because it was not this morning.
Yeah. But it's in a good sector, technology and healthcare. So we'll see what this does after it reports earnings. Sam wants to look at Merck, which is health pharmaceutical. That looks 3 days in a row. And is it up at any resistance? New all-time highs.
Wow. Wow.
Money and drugs, legal drugs. So that looks great. Like it should, what's going to stop it? It's new all-time highs. Earnings are in July. So that looks good. Yeah, 120 after 4 days up. It's probably going to stall there. That would make sense for sure. OMC. You see, it doesn't matter what the instrument is, a different stock, a sector, a commodity. We apply the same analysis. So look at the way this was trending up, pulling back to support and going higher. And now it's got this, wide, whippy trading range. So sometimes that's indicative of a top where things were trending nicely and it gets all wide and whippy, but we'd have to see it actually break down. But if we compress it, it's not attractive. So, it made a heck of a run there. That's new all-time highs. And look how messy it was. So what we want to see is prices begin to contract from these wide ranges, because I don't know what to do with this right now. To me, it looks like it's going to come back down to the bottom here, and we'd see what it does. And Sam is indicating it says a short because it is a sell setup on the daily chart. So this is what we call an igniting wide range bar. Notice it came up to that pivot high, look to the left, an igniting bar. It broke major support. And so now it looks like it should be able to go lower. BC's mentioning AXON. Axon Enterprises. That's another wide whippy range. And this market has been doing this kind of price action where it spikes down so hard and rips right back up again. I don't know what to do with that other than I think to stay away. But I do, when I see something like that, I compress the data. And, this week isn't done. But if it closes this way, this isn't an uptrend. It's a little whippy up here, but this is in an uptrend on the weekly chart. And so it's a strong stock. It's aerospace and defense, which has gotten a bit erratic lately, which is XAR. That's an ETF. And so that's outperforming. You can see how this is broken down. And that kind of a sell setup too, right? Now it broke lower and it's up at this resistance area. And there's that volume spike as it neared that minor resistance. So we got a sector that looks questionable, and this has gotten wide and whippy, and there's going to be sellers up here. How do I know that? Because that's where they were before. And so the depth of retracement, I don't know. This is strength coming back from this breakdown. I just need a different pattern to form here to either confirm what we call absorbing supply, right? Strong demand, or it'll go back down again. They make tasers. Okay. Remember that there was a company that soared years ago that started tasers.
And they were bought out. Yep. It
Yeah.
was Taser, TASR. Yeah.
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 Dale, this is a regional bank. I was going to guess, and then I looked to confirm. Up here. It tells me what it is. So we know that whole sector is in trouble.
Yep.
When you see a momentum move like this, it's rarely ever over soon, because this is institutional selling. They were in these stocks and caught off guard, and they all dumping it to get out of the way. And so this needs to start to create a bottoming process. So our systematic method says, look to the left and see, is there a point in time where this particular stock was considered undervalued technically? And so down here in 2016, it collapsed and it began to bottom out and then started an uptrend. And you can see here, it almost reached that same point. And again, so our assumption is, looking at this without knowing the details of maybe what's on their books, but we know that this sector is going to take a while to, come back.
Yep.
So it's kind of, I think, dead money for a while until it starts to bottom out here, but it's in a good spot. And at least it's not, single digits. The ones that are $5, they might evaporate. Be saying, I feel like I can start the options course when I still can't master technical analysis. So two ways of thinking of that, BC. To master anything takes time. I don't know how long you've been doing the technical analysis part, or if you've done the swing trading part already, but through repetition, things become clearer. And one of the hurdles that we all encounter is that as we start to feel comfortable with analysis, which is going to be based on the current market environment, at some point, the market environment is going to change and things start to become erratic, which shakes your confidence, because if you're relatively new to this, you don't know how to deal with that. And so over time, you start experiencing different market environments and you go, oh, just like I was saying, this is whippy and erratic. It may be topping out, or vice versa on the bottom. So you can't wait until you totally believe that you've got it mastered. The majority of what we do is relatively simple, but you got to get into it and start assimilating it before you really gather the simplicity of look to the left, or this is a pivot. This is going up and this is going down. So each individual concept is simple all by itself. As you put it together, more and more clarity comes. And then look, we have a market environment right now. If you're just starting out, you jumped into something where it's been decades since there's been this kind of inflation. And as I said, pre-market, I don't think there's ever been an administration trying to destroy the country. So when you start looking at charts as they are right now, say, this is insanity, what's going on. And as we look at, the broader markets, which are here, and, you see this whipping up and down that's been going on. These are just pictures of uncertainty and schizophrenia, because it doesn't matter if you have 10,000 to invest or you're a hedge fund with $1 billion. These charts communicate that nobody knows what the hell's going on. Other than we're just not confident in anything right now, other than trading ranges. So it takes time, like anything else, with experience and practice and so on. Things begin to come together, as well as accepting that as much as things can change relatively quickly, and why money management is so important to what we do. And it's the most important thing. So I hope all of this has helped and you've enjoyed the MT Live. We'll be back next week. If you have questions, email myself and Dan, and join us in the green room, subscribe, take a course, and we'll talk next week. Bye-bye.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.